Given the signs that climate change requires immediate action, this is the decade. And so we wanted to start by saying, look, let's make some good commitments.
These issues have moved very swiftly from being corporate social responsibility issues or more niche issues within finance to fundamental value drivers.
We will ultimately divest in a company if we really think we're not getting the traction that we need.
Following a record $305 billion of green bond issuance in 2020 and another $500 billion slated for this year, 2021 could be called the year of sustainable finance. Governments and corporates are all in on the act, and every continent has seen green issuance in the last 12 months. And that's just bonds. Almost $300 billion of green loans were issued in 2020, and there are now more than 600 environmentally positioned ETFs. Amid this explosion in green finance, you'd be forgiven for thinking we were experiencing a revolution in money markets. Some believe we are, and that green finance is capitalism's answer to the climate crisis.
Well, there are a lot of positives when it comes to green finance in the fact that nearly every bank, insurance company, pension fund, asset manager has now made commitments either under sort of in response to societal pressure or perhaps because they've done their own research and they see sort of the writing on the wall when it comes to the issues associated with climate change.
But amongst the jubilant, there are also doubters. Accusations of greenwashing are common, and an investigation by Bloomberg Intelligence revealed that many supposedly environmental funds barely differ from their non-ESG counterparts. Regulators are scrabbling to keep up with the trend, including the EU, which released its green bond taxonomy last year. But there are no agreed-upon standards in the US or internationally, and the growth in green bonds issued by steelmakers and oil companies have raised some eyebrows. The question is, how can money flowing into a company or government be green if that company or government continues with other actions that are distinctly anti-environmental? Spanish oil company Repsol issued a €500 million green bond in 2020. The company ring-fenced the funds for efficiency savings, which were covered under its green bond framework, but meanwhile they pumped more and more oil out of the ground.
This market is growing rapidly. There are no common standards and definitions, and therefore one man's green finance is another man's greenwashing. People have compared the ESG or green finance market to a bubble, a hype, and this is the kind of thing that happens when you have loads of money flowing in one direction at the same time. And you can imagine there being incidents of mis-selling, you could imagine people losing a lot of money, and you can imagine people buying things where they thought it was one thing and it was actually something else. The black cloud across the whole market is this idea of greenwashing, that people are exaggerating or misstating the greenness of what it is that they're selling and what it is that they're doing.
Away from tackling climate change, there's another motivation behind green finance. Even if global emissions were cut to zero tomorrow, the climate is undergoing rapid warming with average surface temperature up by a degree in the last century. The impacts are already being felt with extreme temperatures in the US, sea level rise in the Pacific, and droughts across much of Asia. Alongside human suffering, these changes are adding risk to assets such as farmland or residential property, putting them at risk of becoming stranded. So green finance is evolving as a more climate-smart place to store capital, away from the risks posed by climate change.
If we're going to have a low-carbon future, coal immediately, we have to rule that out. Lots of oil and gas will no longer be kind of relevant or accepted or appropriate either. And if you're a bank with a lot of that kind of exposure on your loan book, well, you have a big potential risk coming at you. So there will come a moment, a crunch moment, where funding will be withdrawn from these kinds of projects and companies, where you can imagine insurance being withdrawn, and where you have these stranded assets, and you don't want to be kind of there holding the baby at the end.
As hundreds of billions pour into green finance, the question seems to be not whether it's already good or bad, but what its impact will be going forward. Is it just a flavor of the month? Believers promise everything from a green tech renaissance to higher and more resilient returns, whilst detractors level accusations of greenwashing and more wasted years not tackling the root causes of climate change. Rising from obscurity in just a few years, the green finance craze shows no signs of stopping.